Your expectation is you're going to see 7% growth in China. And obviously, everyone's pointing to, the upswing in infrastructure. You can obviously have a little bit of lapping as well, considering that, it's coming off a relatively low base. So that helps in that regard. But what part of that do you think is going to be the consumption story? Are you bullish that we are going to see that domestic demand really drive forward? Because that's where a lot of the doubt is, especially when you're thinking of, international investors looking at China and saying, but is consumption going to be strong?
Sure. I mean, obviously, the indicators that came out recently were positive in that regard. So about 3.5% rise in consumer spending, industrial output rising, fixed asset investment rising. I think it's definitive that we're going to see significantly improved consumption in the market because simply in Q4 and Q3 last year, people weren't going to malls because they didn't want to get caught in an outbreak. People were not spending because they didn't know where the next paycheck would come from. And so definitively, we will see improved consumption. Will it be at rapid, voracious levels? Probably not. I think people will still be cautious. But the Q1 numbers aren't yet showing what I think will be the true recovery because people were still going through a lot of bumps of zero COVID ending in January.
So you've talked a little bit about what could potentially be bullish. I wanted to ask you about the geopulse side as well, because, with Xi going to visit Putin, there's always going to be, people that are fretting about that and what the potential consequences from the US side could be on that. But I wanted to more perhaps deviate towards, what these hearings that Gallagher is looking to have or continue on the Hill, bringing in hedge funds, bringing in instos, and perhaps the reticence that could then cause with people wanting to run afoul of any kind of potential, not only outing at some of these hearings, but also in terms of just the risk that it then entails that further measures could be applied by the United States about investing in China.
That's absolutely the intent of these hearings. This is a name and shame exercise. Often what happens with a lot of these U.S. actions vis-a-vis China is that there's a lot more smoke than fire. So the actual outcome of whatever policy measure is taken, be it restricting capital flows or talent flows or equipment flows, actually ends up being far less than is speculated upon. But the intent of these hearings is to scare people away from doing business in China, scare people away from investing in China, even if, for instance, with this pending capital ban, the actual amount of dollars specifically affected is quite low. A lot of people will second guess the decision to invest further in infrastructure in China or put their money in an asset manager in China simply because of the fear that they are named and shamed.